Welcome to Stock Watch with me, Ntaoleng Lechela. And joining me to unpack your stock-related questions today are David Shapiro from Sasfin Wealth and Ricus from PSD Hall in Ruimsig. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Gents, thanks so much for your time today. Now, big news, India and the EU signing a trade deal that'll eventually see tariffs hit zero on most of the parties' imports, a move that has been welcomed, but attention has, of course, shifted to President Trump's response to this. I don't know if he's responded yet because I have been in studio for over an hour, but let's just maybe get your analysis on the move. Many saying it's a hedge against the US's trade policies, Ricus.
To a certain extent it is. You know, people are talking about the end of globalization. I don't think one should say that. I think one should rather say about the way globalization is shifting. And this is a perfect example of that happening as America, as it becomes more dangerous to trade with America, other avenues will open up. And I mean, that deal is 1.8 billion people and about a quarter of world GDP. And it's been decades in the making. And yes, it is a big deal.
Anything to add there, David? I mean, you know, we're talking about what's taken place and, you know, sort of the world order somewhat changing. We even had talks between China and Canada just last week.
Look, there's this move to hurt Trump. I don't know whether they're going to succeed because I think there are two major nations with whom you can't really do anything. And the one is China, who makes a lot of goods that it exports, and then it buys a lot of commodities. And then you've got the US, who provides huge amounts of capital and also consumer markets. So I think you're getting a lot of nations like China, like Canada saying, we're going to show you. But at the end of the day, I still think you need both China and the US to make the world go around. But there are going to be a lot of these deals. And of course, you've got, as Ricus says, you've got a huge population in India, huge consuming population. And, you know, of course, they're also exporters. So, you know, good luck for these deals if they can actually happen instead of just changing business cards or something. You know, you actually want to see trade flowing. But we look at India, you know, it's a very interesting area, but it's a very difficult area in which to invest. It's very fragmented and made up of a lot of small companies. So I wish we could find something that we could, you know, get our teeth into in India, and, you know, that would represent this massive subcontinent.
And on the back of, you know, that EU-India deal, we did initially see some of those European auto stocks benefiting from the move. But I think towards the end of the day, that somewhat fizzled out. The agreement, of course, cuts tariffs on EU-made cars to 10%. Does this give those car makers any fighting chance? I mean, that market already, Indian market, dominated by the domestic players, David.
And China.
Yeah.
And China.
You know, China's taking over. Wherever you go, it's Chinese vehicles. Even the second-hand car market has been dominated by... I'm looking at We Buy Cars, and I keep seeing it under pressure, and I can understand why. Because wherever you go, and I think this is global. And don't underestimate the quality of it. And I think also you've got very big car makers in India as well. So interesting to see how this... You know, I don't think you can buy you can sell a BMW anymore. Because I don't know, I'm not a big car man, but
So you share the same sentiments when it comes to the European automakers, Ricus?
I love Ferrari,
I know you love Ferrari, David.
Yeah, I think it gives them a little bit of a reprieve because obviously, you know, it's easier for them to trade into India. As to whether it's going to stop the, shall we say, the secular decline that whole European car industry is in as a result of the competition coming in from China, I'm not so sure. So it just makes the dark clouds a little bit lighter without actually removing them. So I wouldn't say, well, this is what's going to save them. It might just help them a little bit while they try to figure out how to regain what they've lost, if they can do so whatsoever.
Now, from a sector that's, troubled to one that's not so much. Let's look at AI, sticking within Europe. A question here, and it's actually for David, on your view on ASML as a long-term buy.
It's a long-term buy.
That's it.
That's all you need to know. Its results come out tomorrow, but I mean, the one company where AI cannot survive without ASML simply because of the quality of the machines that it makes. Taiwan Semiconductors, Samsung, none of the fabricators can actually survive without the technology of ASML. And it's only getting better. So, I just think that this is absolutely imperative in any portfolio. And they're understated. They don't make a big noise. They just make these big machines that you have to have. So I've always been a big favorite of ASML.
And I mean, talking about the kind of services it offers, just last week as well, when TSMC was out with results saying that they're going to up their spending, I think ASML's share price just shot up, crossing another record high, just, showing you that, that AI demand is ongoing. On the AI boom, Ricus, would you suggest the AI World ETF? A viewer saying they own ShopRite shares worth just over 7,000 Rand and don't feel like buying more as the share price is a bit high. They are considering selling ShopRite and buying the AI World ETF instead.
Yeah, it's a, I don't think ShopRite's particularly expensive or particularly cheap. So, but I mean, what he's going to do is move away from the SA consumer into the go-go sector, if I can call it, at the moment. Now, buying the ETF is probably a little bit safer than trying to pick out which specific AI company you want to buy, because there'll be a survivor bias. Things that don't make it will be replaced by things that do make it, like ASML, for example. So it's a safer way to go into that sector. But just from my own personal perspective, it would be me going from a company that I know very well into an industry that I don't know very well. Maybe the listed well. No, if he's going to buy the ETF, it means he's not quite sure either. So he's going to make that mind shift, apart from the fact that you're going from a geography focused on a very specific consumer to something else entirely. So I wouldn't, if it was me, I would be prudent and say, don't swap the whole thing, but obviously it's an area that one is interested in, sell some and at least get a toehold in that sector of the market.
And I can imagine how difficult it can be sort of nitpicking and handpicking some of those AI stocks as the interest continues to grow. And what I've been finding quite interesting is how some of the companies that are not necessarily directly in the AI industry, but likely to benefit from the expansion coming to the fore, the memory chip makers and energy players. I think, when was it? About a week ago, one of the analysts picked a uranium ETF betting on energy demand on the back of AI. Let's just get your opinion around those counters, Ricus. I mean, there's also those memory chip makers, the likes of an SK Hynix, the likes of a Samsung.
Yeah, and there's a shortage building up in that sector as well. If you go and take a look at what DRAM's costing you all of a sudden. So if I can step back a little bit, I think the focus is almost stepping away from the hyperscalers, the guys that are building the plants, to those companies that will actually use those plants. If you, for example, take a look at what's happened with the semiconductor index versus the software index, it's two different worlds. People are forgetting that you actually need software to run the stuff on. So I would really start taking a look at that secondary market, whether it be memory chips, for example, or people that are now going to start using applications or programs, showing my age, to actually run the stuff on. So it's not a bad place to start focusing for the likes of Sky Hynix or, for example, Samsung.
any interest there in the secondary market, David?
Oh, yeah. I in fact, a lot of the software companies have been hammered. ServiceNow, Accenture, Adobe, Salesforce, and I think it's going to be the year for them. They're still under pressure, but I don't think businesses can actually integrate AI into their businesses or organization without professional help. You're not going to do it yourself. But my stock pick, which we'll go to just now, is actually what Ricus has been talking about as well. You can get ETFs now, very tightly held ones with that give you good exposure without having to go and stock pick one or two of them as well.
All right.
So there are opportunities, in the market for. Chopra, I agree with Ricus as well. I'd say it's the conundrum. Do you stay in South Africa where things are going to get better, where you think things are going to pick up, or do you go to this other market? So they're two different markets. So you've got to be careful about the switch.
Now we've seen the rand really. It's really strong, right? Trading below 16 to the dollar. The last time I checked, it was at 15.98, right? Levels last seen in 2022. And some analysts are saying it could hit 15.50 against the dollar. Now, question here on how that impacts the rand hedges, particularly Naspers and Prosus, and just looking at those currency dynamics when it comes to their earnings, Ricus.
Yeah, obviously it doesn't help. I mean, it helps on the way up, but it doesn't help on the way down. But I think if one invests in something, the fact that they're a rand hedge or not a rand hedge, obviously clouds your outlook when you're thinking, where are you going to put your funds? But the more important thing is, I really think in the end, what the company is doing. Worrying about the exchange rate is a little bit like worrying about tax. Those are factors, but they shouldn't be the overriding factor when you go and make an investment decision. So yeah, if there is a part earnings in, for example, euro, and the rand is strong, not only against the dollar, but against the euro as well, for example, then obviously it's not going to look that great when the dividend or the profits arrive in South Africa. But one has to live with that. And then currencies are cyclical. The rand's doing very, very, very well, but it cannot continue to do that. So at some stage there will be a little bit of a reversal just to go back to trend, if I can call it that, where we're really over the long term, more than a decade, 2 decades, we've seen a continuous weakening of the rand for very obvious reasons, because we're a low growth economy with very little chance of doing a Singaporean type of growth unless something changes drastically. But these are all long-term speculating things. The real thing is, what is Naspers and Prosus doing? Are they executing better than they were doing a year, 2 years ago under new management? And I would say so, yes. Therefore, if a strong rand depresses the price of Naspers or Prosus to a buying level, then I would buy it, because the company's operations are still doing well. And what you're getting is something that's cheap because of a strong currency.
Yeah. So Ricus, they're saying those currency dynamics, if yes, weighing on the share price, but hey, this could be an opportunity to buy into Naspers Prosus. Your take on Naspers Prosus, David? I mean, there's also been concerns around the pace at which they're doing the share buybacks.
Well, that's helped a lot. But I buy Naspers and Prosus for 10 cents. I'm not interested in food delivery or anything else. I still think that's the big gorilla in the room. And it's going to take a long time before the other businesses, which are starting to show promise, really match the kind of equity earnings or the equity accounted earnings that Naspers and Prosus show from 10 cents. So I like Chinese internet stocks, AI stocks. And, it's the one way we can get into it, through 10 cents. So, I don't bother about the rand. I think, as Ricus says, it comes and goes. It's like the pendulum. It goes from one extreme to the other. It's either hugely undervalued or hugely overvalued. We are going into overvalued territory as well. And I think the miners are crying. You know, the iron ore miners, not the platinum miners, they're doing fine. But I think every other mine, the coal miners are really being squeezed. And it's taking a lot out of them with the rand at these levels. Although it does bring down costs, it brings down inflation. But they would prefer a 1750, 1850.
I mean, for people that are doing European summer, David, they'd prefer the rand to be where it's at right now, okay?
People
All right.
with children overseas, likewise, you see.
Yes. All right, let's just stick on that. You mentioned miners there. Yes, we were talking about copper, but let's talk about gold for a bit. Still at that $5,000 level. Does this rally have more room to run? I don't even know where gold is going to reach at this point. It's just so confusing, especially with uncertainty still at heightened levels.
Who's this directed? Me or
David?
Ricus? Oh, it's a bit of an enigma. It's difficult to read because previous time where gold's gone through the roof have been major crises like 9/11, COVID, wars, whatever it is. You know, that's when you get gold really running away as well. And at the moment we've got gold running away, and yet Wall Street's at an all-time high. The S&P is going at an all-time high. Markets are steady, so there's no threat in equity markets at all. So I think there's massive amount of speculation behind it. It's gone up very fast. I'm not going to call the end. You know, that's the last thing on earth you do. Try and call the end of this. This can go. You know, but I don't know where it's going to stop, and I'm still trying to understand what's behind it, because you know the US is in good shape. Europe's in no one's collapsing. You're not seeing you're not seeing the kind of collapse of currencies or anything like that. And then I look at Bitcoin as well, which is 88. I'm saying, well, if the world is falling apart, why is Bitcoin going down? You know, so I'm a little suspicious of this gold price, but I'm not going to call the end.
Yeah. How are you making sense of what's playing out in the commodity markets, Ricus, particularly what we're seeing with precious metals? I mean, there's also a question here from a viewer saying, should they take some profits? Because they're also at a point where they don't know what to do.
That's where you've got to put your technical hat on and follow the price and have a rolling stop loss in place. That's the only way I know how to trade this. As to where it's going to stop, I don't know. But to me, the gold price is a reflection of what's happening with the dollar, which is still weakening, and that is trust. And it's a big trust in what's happening with the US system. You know, I'll try not to take too long, you know, but rule of law is everything, and that makes things safe, whether you as a person or your investment. If you are taking a look at what's happening in America right now, America is a far more dangerous place, specifically if you're an immigrant. But certainly also if you're a business, than it was a year ago. That means that there's less trust. The price of your country, which is your currency, will weaken. And I think that gets reflected in what's happening with the gold price, because, you know, dollar weakness, gold will go up.
Quickly, before we get into Nedbank then, Ricus, does this change the dollar's risk profile?
It does. That's exactly what's happened.
All right,
your investment and you as a physical person aren't that safe in America as you used to be. That's a risk premium built in, and that's why your dollar is weakening.
All right, let's get into Nedbank. The panel's view on Nedbank acquiring a 66% stake of Kenya's NCBA group. Is Nedbank a buy at current levels, David?
They've lagged. I mean, it's the one bank that has kind of lagged Standard, Capitec, First Rand, so APSA as well. APSA's coming right in that. I don't know where Nedbank's going. I don't know whether this is a desperate move. They were in West Africa. Remember, they sold out of that that bank and have now moved into Kenya. I think there is an urgency to do something. You know, banking is moving to the low end of the market. It's moving to, as we've seen, so many banks are now starting to service the banked sector. You know, informal traders.
Didn't Investec make an announcement about that, like in the last earnings? Yeah.
Yes. They wouldn't take you in the past unless you had 50 million or something. All of a sudden, they've changed tack. You know, I'm exaggerating a little, but they are trying to get into it. You know,
Yeah.
and they say, hold on, that's where the action is. And I think Nedbank is not in that area, and maybe they're going into this bank in Kenya. It's a good bank. It's a 14 billion investment that they make, and I just hope that it comes right. We don't know a lot about Africa. You know, it's still battling along. It still hasn't given us the promise that you know, we've expected over decades. Well, good luck to them. I can't really comment on how this is going to operate, but the numbers look good, and its history looks good.
Okay.
So,
all right, then let's get into David. Let's get into your stock picks. Let's move over and get into your stock picks. Ricus, what are you hanging your hat on today?
Yeah, I would wait for earnings on the 29th, but it's Amazon. And that thesis, or my thoughts about it, hangs on what Amazon Web Services are going to do. If we can see a revenue growth of, let's say, 25 to 30% plus, that's going to be a huge kicker to their income for the next 12 months. And at a 33 price earnings, I think they will be cheap. If it disappoints, you've got downside, let's say 10, 15% in the share price, so you're a little bit hedged there as well. But good revenue growth, considering that of the Mag 7, Microsoft's been the worst performer over the past 12 months. I think it's been left behind for no good reason.
What about you, David? Are you in the tech sector? You did mention something about an ETF.
You know what I'm buying is the SOX, SOXX, and it's a semiconductor ETF. And what I like about it, it's only 30 stocks. Unfortunately, it's US stocks, but it does have Taiwan Semiconductor in it, Nvidia, Broadcom, Qualcomm, and it's also got ASML in it. So it gives you a very tight exposure to the semiconductors. So instead of trying to pick them, you've got very good exposure to the whole segment of this. And it's got Micron as well. I think Micron, because of the run in the share prices, now its biggest holding. So about 8% of this ETF is in Micron. And if Nvidia goes up, so on. So it's a very good exposure for first timers to come in and broaden, get a broad exposure in this whole segment.
All right.
SOXX.
SOXX, right?
Yeah.
All right. Ricus, David, thank you so much for your time and joining us this evening for Stockwatch. That's all for the show this evening. Thanks to my guests, David Shapiro from Sasfin Wealth and Ricus from PSG Hole-in-One Ruimsig. Up next, The Close.